You're tuned in to Agriculture Today, and we continue our Friday show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue our conversation on the domestic and international grain markets, picking up that conversation with grain sorghum.
No change in the domestic U.S. grain sorghum supply demand balance sheet at all. Price is still $4.85 a bushel, and interesting that with the grain sorghum price of $4.85, now you've got the corn price at $4.70. So again, the domestic export sales of grain sorghum, much of it, almost all of it, going to China. Certainly a big issue there. 245 million bushels of exports last year, 109 million. Year before that, 296. So we're kind of bouncing around, and actually, Shelby, as you and I have talked about in some previous weekly reports, that you do see some weeks really low, then extremely high, moderately high, then dropping down again. It seems that we sell grain sorghum in bunches, but on average, doing pretty decent.
Yeah. Look, the sorghum's the one bright spot, I think, in another wise, pretty ho-hum commodity outlook. Also, from an international point of view, we're starting to see Southern Hemisphere programs in Australia and Argentina slow down a bit. I think they'll export about 1.5 million tons each. Most of that will have been moved or booked by now. So I would anticipate basis levels for U.S. sorghum to start to strengthen a bit in the next couple months going forward.
And then also wanting to talk about what we're seeing for soybean.
The soybean supply demand balance sheet mainly had moderately negative news on it, but again, saw a 5 million bushel decline in imports, which would be positive really for the U.S. supply demand balance sheet, but then came down to crush being unchanged, 2.3 billion, exports being dropped 1.7 billion bushels from down 20 from the previous report. I'd seen a report within the last 2 weeks that we were, it was about a week and a half ago, we were about 75% harvested in Brazil, and that's probably 85% now at least. So you're bringing that crop out of the field down there. They'll have to logistically move it to the ports, and will be all that much more of a until that gets cleaned out of the system. Then it's hard to see a lot of movement in U.S. soybean exports. There could still be surprises when we finally find out what the low domestic what the actual yields are. The USDA resolutely holds to a higher yield than in-country reporters are showing. So I guess we'll see who's right, they or the USDA. And little adjustments lower in seed, little adjustments lower in residual. You add all that up, ending stocks up about 30 million from 315 to 340 million. Stocks to use up to about 8.3%, was about 7.6, had been at 6.1, 6.4 2 years prior to that. So domestically, we are in at least a moderately higher relative ending stock situation than we were, and prices are reflecting it.
And just a question on that, Dan, is some of that increase in ending stock sort of a fading in the demand from the renewable diesel sector and the biofuels on the oil? I think that's a bit what's driving that. Is we were pretty optimistic on that demand sector, and I think it's pretty well saturated, maybe even backing off a little bit.
It's quite possible. At least as we look at for soybean oil, the actual USDA numbers in the balance sheets still at 13 billion pounds as far as they're projecting.
Yes.
And that's up from 10.4 2 years ago, 12.5 last year, and 13. So it may be that you may be very right, but at least that in their byproduct balance sheets, they're not reflecting that yet.
Yep. No, good. Look, shifting the focus to the international side of things a bit. Argentina exports continue to be estimated about 4.6 million tons compared to 4.2 last year. We're watching Argentina, given the political discussion down there, to see if Milley's going to be able to continue to make financial reforms on that. Brazilian exports unchanged at 103 million tons compared to 95.5 last year. Paraguay was up slightly at 200,000 tons to 6.5, unchanged from last year. China continues to buy southern hemisphere Brazilian, Argentine, and Paraguay beans quite aggressively. USDA has their total soybean imports at 105 million metric tons, which would be a record. That's compared to I think about just right 100 last year. Their crush is estimated in China at 98 million metric tons. That's up 2 million metric tons from last year, and would be a record. So it's good to continue to see good demand coming out of China for soybeans. However, they have a preference at the moment, and that's a dollar value for Brazilian soybeans. They're more than $1 a bushel discount, or have been over the last couple of months, to U.S. soybeans. Again, I think that's driven predominantly by the foreign exchange rate.
The quiet third country down there is Paraguay, and they've had, you look at the last 3 years, they've had pretty strong, they've had decent growth in production, a real recovery in exports. They were at 6.5. Oh, excuse me, 2 years ago, they were dealing with drought situation, 2.27 million metric tons, but up to 6.5 million a year in the last market year projected. The one that'll finish on August 31st, 2023, they project the next year up to 6.5. So again, we're looking at Paraguay holding in decently, and just one more element coming out of South America that's competing strongly against the United States.
Yeah, I think it's important to remember last year that Parana River was suffering from low water levels, significantly impacting exports from that upcountry Argentina river situation into Uruguay and Parana and southern Brazil on that. That seems to have reconciled itself a bit, with a bit better access to the export markets for those countries this year.
And one crop we usually don't touch on, but want to just throw in there real quick, cotton.
Cotton prices still are lower. The U.S. 2 years ago, they were at 91.4 cents per pound for upland cotton. That'd be 21-22 mark, and you're 84-85 in 22-23 projected for this 23-24 marketing year at 76 cents, and that's down a penny from where we were. The world situation has actually tightened up a little bit, but the U.S. situation really has not changed much. Cotton domestic use just so the export figure 2 years ago, 14.5 million 480 pound bales, 12.8 last year, 12.3 this year. So here you have the U.S. cotton situation sort of languishing, moving sideways to lower, but yet some positive things happening on the in terms of supply and demand balances on the international side. So interesting to watch that and how it all plays out this year for the U.S. cotton industry.
As we are talking about all these different things moving, Guy, important to mention what transportation is looking like around the world right now.
Yeah, I mentioned the Parana River situation, but looking at the Baltic Dry Freight Index, Bulk Dry Freight Index, compared to where we were last month when we were having this conversation, we sort of peaked with the index at about 2,400 in the middle of March. At the moment, that's dropped by about 800 points, by about a third, down to just below 1,600. I think that's reflective of a number of the situations resolving themselves both in the Red Sea, in the Panama Canal, particularly for dry bulk freight. They've sort of worked that situation out. It's the Panama Canal situation continues to show relatively strong basis values in the PNW versus the Center Gulf, as that's where our demand is coming from China and Asia. If that'll may continue through the summer, we'll see how summer rainfall and weather impacts that Panama Canal situation. But I would continue to keep a close eye on that, particularly as when Asia demand comes in, it'll definitely strengthen those PNW Western grain belt basis values relative to Center Gulf and the river and east.
Just a quick observation. You know,
And something-
China's been in the news a
And
lot.
something that has happened is,
Go ahead.
nope, go for it, Dan.
China's been in and out of positions on the markets. Some of that grain coming in and out of the Red Sea area. And I don't know that they're going to ship in by any less than what they normally do, but they are very willing to hop in and out of positions when it seems to suit their advantage on the price side.
Yep, definitely.
And before this interview, I had a quick question for you. Are we seeing really any impact from what's happened in Baltimore?
Not in the grain side of things. I think it's having impact in other sectors, but there's not a lot of grain that comes out of Baltimore. It is a important container port to some extent, but most of the grain comes out of the Center Gulf or the lakes or the PNW. So from a ag commodity point of view, not so much.
Not a direct effect, but if it does slow down the U.S. economy tangibly and causes interest rates or other factors to change around, it could have an indirect effect. But as far as a direct effect, again, we're not sending a lot of ag goods in and out of that port.
So as we round out today's conversation, Dan, what reports are you excited to see in this next month?
Well, be interested in seeing the May, June, July WASDE reports that we won't have any USDA NASS crop production numbers until we actually get. We'll have farmer surveys in August. We'll have actual in the field measurements in September. So not a lot coming out of NASS on the production side. Other than we will have the acreage report coming out at the end of June. And that was a report that a lot of fireworks brought a lot of fireworks last year. We'll see if what farmers have actually done, how they voted with their planters, and then for this year in terms of planting. And we'll have, of course, the stocks reports that'll be right in that too, and that'll give us an idea of how the especially corn, wheat usage has worked out on the feed side.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you very much.
Thank you, Shelby.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.